Hello everyone, welcome to this my new video. I will share today case study for the Hero Motocorp Limited share. So starting with about the company information. So first understand Hero Motocorp HMC is a dominant leader with an overall market share of 34.6% in FY 2022 in the Indian two-wheeler segment, while 48.3% share in the Indian motorcycle segment. Hero Motocorp has a wide distribution and service network spread throughout the country. The company has 8 world-class facilities across the globe, including Colombia and Bangladesh, and assembly lines in several India countries, that is, in Africa and Latin America, with a combined installed capacity of 9.5 million units of two-wheelers per annum. The company has developed capabilities with a preeminent R&D ecosystem in India and Germany. It has over 9,000 customer touchpoints across the globe. In the motorcycle segment, their 100cc category companies models include Splendor, HF Deluxe, etc. The company embarked on a collaborative journey with Harley Davidson in 2020. Hero Motocorp marked the milestone of becoming a top seller in the 1000cc plus segment, taking the market share in the category to 37% as compared to 27% in FY21. In FY22, they sold 531 units and have 13 dealers and 10 authorized service centers. If possible, pause the video and have a look about the company, geography mix, product mix, chart view. Next, sales growth. During FY22, the revenue degrew by 4.5% year-over-year growth to rupees 29,551 crore, 49.9 lakh units of motorcycles and scooters were sold in FY22 versus 58 lakh units in FY21. The revenue from palm parts, accessories, and merchandise business during FY22 stood at rupees 3,934 crore. Their palm business exhibited momentum and grew by 24% year-over-year growth in FY22, backed by extensions of range, increased pull-based demand system, and deepening of distribution reach. In quarter 1 FY23, the revenue stood at rupees 8,447.5 crore in 13.9 lakh units of motorcycles and scooters were sold. On a basis, it saw a rise of 16.8% in its volumes. However, there was a decline average realization during the same period. The part, accessories, and merchandise PAM business continued to exhibit steady performance and posted a revenue of 1,061 crore. HMC had been a downtrend since the last few years, and as it's fell up to rupees 2,400 at the beginning of year 2020, after making high of 4,200 in August 2017, the stock witnessed further selling pressure during lockdown to test the low of 1,475 in March 2020, after which is railed significantly to test 3,600 and odd mark in February 2021, which since then it has been witnessed some cooling off in the price. So 2,150 and 2,350. So this is the accumulation. This zone can be used by long-term investor for accumulation. On the upside, the stock can go up to 3,600 level, and a breach of the same would be required for further legs to the rally. EBITDA growth. In FY22, EBITDA stood at rupees 3,445 crore and saw a decline of 16% year-over-year growth. LEAP cost saving program contributed rupees 1,002 crore of savings and rupees 454 crore of accruals to the bottom line. The company had also indicated that it would continue to take judicious price hike in order to mitigate the impact of higher commodities post cost going forward. Rationalization focus on premium motorcycles and exports is expected to add the EBITDA. In quarter 1 FY23, EBITDA was rupees 941 crore. They saw softening in prices of commodities like iron and aluminum, and employee cost increase on a year-over-year growth basis as incentives and increments were higher along with the rise in hirings. Other expenses to observed a rise on a year-over-year basis. PAT growth in FY22, the PAT profit after tax declined by 15.2% to rupees 2,528 crore on the back of fall in operating profit. In quarter 1 FY23, PAT increased to rupees 606.7 crore. They saw a decline in other income on a quarter-over-quarter basis, an account of two factors which includes mark to market losses on fixed maturity plan and investment made towards Cargo. Next, EBITDA margin. In FY22, the EBITDA margin was 13.5%. The fall is largely attributed to a surge in commodity prices, partly offset by leap savings and judicious price increases. The employee cost grew nominally due to increase in a headcount and impact of annual increments. In quarter 1 FY23, the metric was 11.1% and saw a contraction of 28 BPS on contract over contract basis. The company undertook a price hike of rupees 850 across models, example showroom, in April, and rupees 1,200 across models, example showroom, in a July. Price increases has a lagged cost inflation and more price increases would be undertaken to commensurate the raw material inflation. At margin in FY22, the metric reduced to 8.6%, mainly attributable to negative operating leverage and higher commodity inflation. In quarter 1 FY23, the PAT margin was 7.2% and declined by 137 bps on quarter-over-quarter basis. ROCE. The ROCE has been on a decline since 2017 as a result of consistent increase in retained earnings, which has led to increase in an investment. The ROCE declined to 20.7% in FY22 on account of fall in EBIT to rupees 3,310 crore. Next is ROE. In FY22, the net profit and net worth was reported at rupees 2,528 crore and 15,847 rupees crore, respectively. The ROE stood at 16%. There was an increase in other equity during the year attributable to rise in retained earnings. The return on equity has been declining over the years as a result of rapid growth coupled with increase in the net worth. Cash flows. The cash flow from operation in FY22 stood at rupees 2,104 crore as it continued to generate a healthy cash flow from operations led by operational efficiencies. However, a year-over-year growth decline was majorly pertaining to working capital adjustment and fall in a profit. Cash outflow from investing activities was rupees 222 crore. The major adjustments, including capital expenditure on PP&E, intangible assets, capital, VIP, etc., at rupees 570 crore and investment in associates at rupees 150 crore. Further, There was net purchase of investments at rupees 332 crore and interest income on financial assets carried at amortized cost at rupees 157 crore. Cash outflow from financing activities was rupees 1975 crore, were primarily driven by the dividend paid out during the year. The working capital days of Hero Motocorp has remained significantly strong over the years. Free cash flow in FY22, the free cash flow per share was rupees 105.3. The company spent rupees 436 crore towards research, R&D, and rupees 188 crore as capex. Turnover ratio in FY22, the metric stood at 1.27. Total assets stood at rupees 22,478 crore, which majorly comprised of property, plant and equipment, equity accounted investment in associates, and non-current investments. The overall economic and the auto market slowed down. The sales volume were impacted, hence bringing down the asset turnover ratio. Equity in FY22, the long-term borrowings and short-term borrowings of the company stood at rupees 36.2 crore and rupees 317.3 crore respectively. Interest coverage ratio in FY22, the EBIT and interest payments were rupees 3,310 crore and rupees 53 crore. The interest coverage ratio stood at 62.3. The company has sufficient resource to meet its interest obligations. Current ratio in FY22, the current ratio stood at 1.92. Current asset was rupees 10,572 crore and current liabilities at rupees 5,518 crore. Current assets majorly constituted investments, trade receivables, and inventories. Current liabilities comprised of trade payables, other current liabilities, and borrowings. HMC has improved its current ratio over the years on a back of stable current liabilities and growing current assets. P ratio. HMC is currently trading at P of 19.49 with a TTM EPS of rupees 132.68 per share. Hero Motocorp is enhancing capabilities and preparing itself to expand its presence in the premier two-wheeler segment, both under Harley and its own brand name. The company is even focusing on increasing its penetration in the international geographies. Dividend yield in FY22, the company declared an interim dividend of 60 rupees per share in February 2022 and a final dividend of rupees 35 per share in July 2022. The dividend payout ratio stood at 81.92%. Management, the high quality management of the company has strong vision to pursue out performance in order to generate a value for the business and the stakeholders. The management plans to strategically enter new, developed, and fast growing economies, forging more partnerships to drive growth. They are also working on consolidating their presence and increasing market share through network expansion, brand building, and focusing on retail finance in top six markets: Bangladesh, Sri Lanka, Nepal, Nigeria, Colombia, and Guatemala. Aim to build a complete portfolio across engine capacities aligned with an ambition of catering to the aspirational segment and growing its existence in premium motorcycle market. Leveraging their brands, credibility, R&D capability, and technology prowess, the management is now geared up to redefine the clean mobility space with its new offering with the EV. Stakeholding pattern. The promoter group holds 34.78% stake in the company. FII's shareholding decreased from 29.22% in quarter 4 FY22 to 28.84% in quarter 1 FY23. DII shareholding increased from 24.24% in quarter 4 FY22 to 25.58% in quarter 1 FY23. Top public shareholding: LIC 11.29%, Government Pension Fund Global 2.40%, WGI Emerging Market Fund LCC 2.32%, Parag Parikh Flexi Cap Fund 2.14%, SBI ETF Nifty 50 1.96%, ICICI Prudential Blue Chip Fund 1.12%. Competitive landscape: in the Indian 2W market, HMC captures the majority of the market shares with 34.6% share in two-wheelers and 48.3% in motorcycles in FY22. HMC has a dominant market share in the entry and executive level motorcycle segments with a strong brand equity in the rural markets. Further, they have strong network with over 9,000 touch points across the globe. Players like Royal Enfield, Bajaj Auto, and TVS Motors have a strong foothold in the premium segment. Growing aspiration of the owning a premium motorcycle has led to HMC to start pouring into the premium segment, demonstrating collaboration with Harley Davidson. So, age meta expect the maximum grade for the company could be 30. Any company above 20 is a worth considering. A grade below 15 is a considered to be poor. So here, Hero Motocorp, it's a 20. This document and process of identifying the potential of a company has been produced only for learning purpose, since equity involves individual judgments. This analysis should be used for only learning enhancements and cannot be considered to be recommendation on any stock or sector. Our knowledge team has a limited understanding and we all are learning the art and science behind this. Thank you.